Hey guys, it's Steven. In trading, we know that prices can change directions very quickly. Sometimes that can happen in just one or two candles. One of the classic change of direction candle setups is the engulfing pattern, or what I call the hairpin turn. But in addition to the classic setup, there are a couple of other ways to look at the engulfing pattern that I'll show you today. This is the classic bullish engulfing pattern. And you'll see that the second candle in this pattern engulfs or completely encloses the first candle. And what we're looking for is that second candle to engulf or enclose the body of the first candle. This is the body, the solid red part, and these are the wicks or the tails of the candle. So all we need is for the second candle's body, which is again this solid green part, to enclose or engulf the first candle's body, which this candle does. What's happening with this bullish engulfing pattern is that this candle closes, this candle actually opens lower than the close of this candle. So the second candle opens lower than the close of the first, and then completely reverses the body of that first candle. So what you're getting is a push against price action, whether it's a bullish engulfing pattern like we have here, or it's a bearish engulfing pattern, which is just in the opposite direction. You would have a green candle that would be fully engulfed by a red candle. As I said, I call this a hairpin turn, and I'll show you why. Watch how this happens on replay. You get the quick move down and then a quick move up, right? So basically, what this reminds me of is a Formula One race, and that's the hairpin turn. The car goes really fast into the turn, has to slow at the bottom, which are these 2 points, and then rapidly accelerates out of that turn. I actually got to go to a Formula One race in Austin and sit literally in a hairpin turn on the track in the stands at the hairpin turn. And that's what this pattern reminds me of. So this pattern is a reversal pattern. And what it means is that the trend, and you can see here, there's a downtrend, is that downtrend should be ending with this pattern. It doesn't necessarily mean that the market or the stock is going to rip back higher, but what should happen is the downtrend should end. You could get a sideways pattern after this hairpin turn, but it means the end of the trend, not necessarily the beginning of another trend. So this is, like I said, the classic version. I want to show you a second version that appears a lot more often, and what that involves combining candles. So let's take a look at that. So in this example, we get a hairpin turn right here, but we actually have two candles that make up the first red bar in our turn. So these candles combined give us a candle that has this height and this low, right? That's the low of the body. And it's okay if the low of the green candle matches the low of the red candle. It's still beginning near that very low sort of base of the body of the red candle. And you can see that this green candle now, because this is the height of this candle, it engulfs these two candles combined. So you can just literally visually combine. This is what I do. Just visually combine these candles into one. And now you get a hairpin turn. And you can see, as I said, you have this downtrend. This is a 15-minute chart. That's what we've been looking at the whole time. So you have a 15-minute downtrend. And what happens when you get the hairpin turn or the bullish engulfing pattern here is the trend ends. It doesn't pop back higher, but you start going sideways, right? So again, the bullish or bearish engulfing pattern should mark the end of a trend. And this is an example of combining two candles to get your first red candle. And I'll show you an example of combining the green candles to get your engulfing candle. So here's a great example of combining two green candles to get your engulfing candle. This is your first candle, this red candle, and you can see that the pattern takes place at the end of this downtrend. Every time we're looking for a bullish engulfing pattern or hairpin turn, and we're looking for a bearish engulfing pattern or a hairpin turn that's bearish at the top of a trend, I have to have the pattern, but also the trend in place. This pattern in a sideways market is not a hairpin turn, right? You can't have a hairpin turn unless you first have the car racing into the turn rapidly. So the car going downhill and then turning and going back up, or the car going uphill in the case of the bearish engulfing pattern, or the hairpin turn, where the car is racing higher and then turns. You have to have that trend first. So we have to have the pattern, which I've been showing you the different variations that you can find, and we have to have the trend. So it has to take place at a certain spot. And I did a video on spotting setups where a setup takes place. And I have a cheat sheet on that, which I'm happy to share with you if you want a copy. That's free. Just type spot in the comments below, and you can have this cheat sheet about that. What I'm doing today is talking about once you're at a place on the chart that you find a setup, this is one of the setups, the hairpin turn, that you can use to spot a market reversal. But in order to have that reversal, again, you have to have the trend going one way in order to reverse. So in this case, again, this is the two green candles. And you can see that these two green candles combined together fully engulf this red candle, right? That's your hairpin turn right there. And again, this is what that looks like as it's playing out. Right, a move down and then a rapid move back out of that move down. And if you'll note in this case, you also have a really nice bottoming tail, and this is also a hammer pattern, which I can talk about more in another video. But this candle alone is a reversal candle. Combine that with the hairpin turn, and now you have two different indicators telling you that this downtrend should come to an end. There are a couple of ways to get into this trade, and I'm not going to go over all of those in depth, but one way is to buy at the top of the reversal candle. So that would be here, entering at a price of around 527.11. Another way is to wait for a candle to close above your hairpin turn, and that would be this candle. This would be another entry spot, right? So two possible entry spots. This one is a little more aggressive, the first one, entering on the reversal itself without waiting for another candle to close above. A little more aggressive because you don't have confirmation, right? If you want to play it more conservatively, you're looking for confirmation, which means another candle moving in the direction of the reversal, which in this case, since it's a bullish reversal, we're moving higher, and you could enter the trade here, or again, more aggressive, you're just entering the trade here as you clear this red candle. There's one final way that is a little more complicated, but I'll go over it relatively quickly. And that is to use what in ICT trading, which I don't do ICT trading as my main form of trading. I'm generally trading price action, but there are some ICT tactics that I think work really well. One of those tactics is to use a fair value gap. And again, I'm not like teaching that in this video, but I'll show you what it looks like really quickly. When you have 3 candles like this moving higher, and it's the same thing moving lower, just in reverse, and you get a wick that ends here, and on the 3rd candle higher, that wick, which ends here, doesn't meet that first candle of the 3, right? You have a gap. If it doesn't overlap with that first candle's higher wick, you end up with a gap. So one of the ways to enter this trade, again, this hairpin turn or bullish engulfing pattern, is to wait for a pullback to around 50%. So around here of this fair value gap. So if you're an ICT trader, you'll know what I'm talking about. If not, you can look up fair value gap. Like I said, I explained it very quickly, but that's another entry point. So that's 3 different entry points. The first one is literally at the close of your hairpin turn, which again is the most aggressive. The second one is as a confirming candle clears the top, and that candle may take place here, right? It may be the next candle after this is completed. In this case, you didn't get a close of a green candle that was higher than this hairpin turn candle until 4 candles later, 1, 2, 3, 4, 5 candles later. And the third way would be to enter on a pullback after that initial push in your hairpin turn. You're not always going to get that pullback, obviously. So this entry may not exist, but when it does, it's not a bad spot to get in the trade. And obviously what you're doing on that pullback is getting a better price, right? Your average price entering the long trade is going to be lower than if you had entered either at 1 or 2. Again, the trade-off being that you may not get that pullback. One way to approach this is to do half your position here, which is rather aggressive, right? It's the more aggressive approach, and then add the other half if there is a pullback. That way you would end up with an average price somewhere in this range, right halfway between 1 and 3. That's one way to do it. You could also do half your position here and half your position when you get that closing second green above. So those are a couple of ways to tackle the bullish engulfing pattern. Obviously right now with the market in a strong uptrend, we're having more bullish engulfing patterns than bearish engulfing patterns. Everything I've just taught you though works just the opposite in a bearish engulfing pattern or a bearish hairpin turn. And you would be shorting on the entries as opposed to going long. So again, I did the cheat sheet that helps you find these trades and know where to look for these trades. And if you want the cheat sheet, just comment spot in the comments and I'll get you a free copy of the cheat sheet. But this is one of the specific patterns that plays out once you are at the correct place on a chart. In this case, obviously, you have to have that downtrend first, like I said. Another couple of things, just sort of bonus material. If this is taking place at support, so you have, prior support over to the left, that adds oomph right to this trade. If you're getting a double bottom in place, if you're getting a 20, and that's the red line, here's the 20 simple moving average. If the 20 happens to be down here and is turning, in this case, it's here, and your turn takes place under the 20. But if it happens to take place with the 20, that's a little more powerful as well. So a couple of sort of bonus tips on where to play this pattern and where it becomes even more powerful and you have even more likelihood of an actual turn in direction and moving higher as opposed to just the trend ending. So I hope this was helpful in your trading. If it was, please hit like and subscribe. If you have any questions, please feel free to ask those as well. Again, this is a 5-minute chart we're on now. We were on a 15-minute chart to begin with. And any questions, I'm happy to answer. Thank you again for watching, liking, and subscribing.